This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at Thursday's market action, we welcome in Bryan Doherty, Senior Market Advisor at Total Farm Marketing. He's joining us here today. Bryan, good afternoon to you, sir, and hopefully you're having a good holiday shortened week so far.
You know, we are, and the markets have been active, and there's been some opportunities here. So I think the overall trend of, let's say, uncertainty with the crop is providing support. And we had some support yesterday with news in the wheat market and some remarks by President Putin of Russia that he wants to revisit these export corridors. Gave the market a boost. Overall, things holding together relatively well. Dollar, remember, is in a big long uptrend, off a little bit today, but as we get closer and closer to harvest, or as it picks up steam, we're going to get a little bit more and more information daily, Jesse. And so far, I would say it's holding true so far that farmers are chopping corn or getting into the early corn. Their biggest issue is where it's dry, and so that'll again confirm that the yield is going to be down in corn.
Yeah, definitely. Well, and of course, coming up on Monday, we're going to start to maybe get a better idea from USDA what that yield estimate is. I think everyone in the trade, it feels like we're maybe starting to mark time ahead of that WASDE report on Monday. But on that corn side specifically, Bryan, I think everyone expects the USDA corn yield to come down. I think the question is, how much is USDA willing to come down with this September number? I don't expect a huge drop. I wonder what your thoughts are, just looking at things here, looking at how things are shaping up, and maybe thinking historically as well with what USDA typically gives us.
Right. That's what I was just going to say. Historically, the USDA has a tendency to work toward a number rather than make drastic cuts one month to the next, and all over the map. So I'm going to give them credit for that, which means that even if there is a growing belief that maybe the yield is under 170 or near that Pro Farmer 168 or 167 DTN digital tour, to drop from 175.5 down to that level seems a lot. I like the idea that the corn market will work its way toward a number, and the USDA will likely come in around my guess would be 173, 173.5. They've got plenty of time to continually adjust that downward if it's necessary or needed. We got to remember, we've had some, let's say, disruptive corn production since 2019, but there was a stretch for 7 years where the corn generally yielded better than expected every year. And so there is a bit of a history that, making big cuts could be premature. And I think the USDA will keep that in mind. So there's two numbers. There's one, what the USDA will probably say. And then the second one is, what does the crop really look like? I still think there is an army of people that firmly believe, and I might be in that army, that the yield is well under under 170, maybe 168. In line with Pro Farmer. Just too many problems from the get-go this year, and just too much feedback from customers that I think are realistic. They're not telling me just their low numbers so that when they get in the field, they feel a little better about it. They're just saying, hey, this is the way it is. This field is really good. This field down the road didn't get rain. I got tipped back. This got in late. Whatever. It doesn't quite have the right mix. And that coincides with the USDA's 19% rate at poor to very poor.
Well, Bryan, to your thought, thinking USDA probably going to come in with a 173.5 number on Monday. If we get that type of number, is that enough for us to at least hold this kind of support range around this 665, 675 mark, or does it need to be a little bit lower than that? to maybe hold this range?
Yeah, great question. I would be prepared for prices to kind of drift lower anyways. The old saying is the market doesn't need any news to go lower, but it needs some kind of news or perception to go higher or help somewhere else. You got the old saying is you have to feed the bull. So unless energy prices rebound real quick or wheat rallies up, it is tough to get a rally and then continuous new buying. People who bought willing to buy again, and then tomorrow buy again. That has to come on momentum. So I always call it PMA, perception, momentum, attitude. The market has to have the right perception. It has to have momentum, and then the attitude has to be, look, we're buying. It has to be bullish, and it's just tough to come by that in harvest when the end user is kind of stepping back at that point, saying, well, I don't have to buy today, so I'll give it a week, or I'll wait tomorrow and see what it looks like.
Well, Bryan, over on the wheat side, I know you mentioned the comments from Russian President Vladimir Putin that came out. That really seemed to give us a pop in the wheat market, but then we kind of given that back through Thursday's trade, just kind of settling back into a range, it feels like. I know we have the high U.S. dollar, though, as well. I'd have to think that that's a weight over everything. But if you look at this wheat market, I don't know, it just felt like a lack of news again on Thursday allowed us to kind of drift lower, Bryan.
That's exactly what it was. You had a lack of news, lack of follow through, anything on these announcements or talks or rumors or whatever it is that came out yesterday. The market grabbed hold pretty hard and fast. And we talked with customers yesterday and said a lot of times you'll see that when you have this type of news, either there's a lot more that follows up or there's none. And if it's none, it's just kind of like hot air let out of the balloon. The market drops back. The traders that bought take their money out of the market. And that's kind of where I think so wheat's 15 lower Chicago today. I think we ended up, 25, 30 higher yesterday, but well off the high. So maybe net for the last 2 days, you've got some positive gain. You had a lot of technical buying yesterday. Prices pushed through a Bollinger Band. They pushed through what I call the neckline of an inverted head and shoulders formation. A lot of positive things. I think it created short covering, maybe new buying. But there again, we saw yesterday the market went up and it ran out of steam and then it started to drop back. And I often think the market participants will ask, well, what next? And if there isn't a next, they're pretty quick to run their stops up, which means if the market starts to drop back, they get their stop order trigger, which means they're a seller. So if they bought initially, they're exiting. If they think the market might tip over and the trend could turn down, they initiate a position. So you can get sell stops triggering two new types of selling, exiting and or entering.
I think as well, the wheat market, and this applies to all the grains, a little bit of harvest pressure maybe with spring wheat harvest starting up across the northern plains, North Dakota, Minnesota playing catch up, and then throw on top of that winter wheat planting getting ready to get going in parts of the southern plains. I would think some of that is maybe adding a little bit of just overall pressure in the wheat markets right now.
Well, I think it is, and we have to remember this too. When I look at Chicago wheat, I'll use that as my $8.50 a bushel. That's still historically a high price. That's for July of next year. That's with the market down today. So when you start talking $8.50, $9 wheat, you got to think that there's going to be at least a temptation for farmers to plant the wheat. And if they can get at it soon enough in spring, maybe double crop that to soybeans. And, we heard all that rhetoric when prices were high this last spring and early summer about the administration fostering and promoting double crop in those type areas. So there may be more wheat acres. I don't know a lot of the detail beyond that, but that was out there. I'm sure it's still out there. It's not frontline news.
Definitely. Let's talk soybeans, Bryan. A lot swirling in this soy complex, I think, in general. I know earlier the week, the news out of Argentina, the 200 pesos to $1, trying to spur, selling from Argentine farmers. That's been a weight on this bean market. On Thursday, though, soybeans held up, I thought, fairly well. But I know there's a lot of folks who are in the trade who are a little worried about the look of the soybean charts here this week. What are your thoughts on this soy complex as we get past Thursday's trade action?
I share the same concern on the trade charts. In fact, I'm looking at them right now, and we took out our previous dip low. We're still, in theory, in a consolidation pattern here. Nice close today to turn positive. The lower Bollinger Band held, but today's low took out the low from the middle of the month. So that takes us back toward the low, the 1st of August, about 1359 in that area there. So there's some definite downside potential. There's a gap that was left in July too, around 1349 that prices could head to. The technical picture really looks bruised here, kind of hanging on by its fingernails. The reality is that the Pro Farmer Tour, boots on the ground now, expectations are the USDA is going to be a little bit closer on this one, 51.5 to 52 bushels, which means adequate, not overburdensome, but adequate supplies moving into the fall window. So the bulls may be losing their grip. The Argentine news this week, I don't know how to read that because everybody knew they had beans. Now it's just pulling their beans out of their hand. There are farmers there holding beans as a hedge against inflation. But now that these beans, so in theory, were rumored quite a few sales already to China. So you kind of look at it, Northern Hemisphere supply to the world. It's just, where is the supply? Unfortunately, with $1 higher, it probably means our exports stay skimpy. And consequently, that's another thing that weighs on this market, part of the technical picture here.
Bryan, let's talk livestock. Another Thursday of no weekly export sales. Overall, I know that's something that we're waiting to see if those do come back on the 15th as reported. But livestock trade, didn't feel like there was a whole lot of fresh news there either to move this market. We kind of just felt like we drifted in hogs and in the cattle trade on Thursday, Bryan.
For sure. The market doesn't have one bit of information. It knows what the daily, weekly slaughters look like, and it knows kind of the big picture herd mentality. You've got your post-Labor Day here. Got a real nice uptrending market overall, or at least sideways trend. But I think the bigger problem with the cattle market and the hog market is just kind of the perceived world demand or the appetite for an inflationary environment when you've got the dollar racing like it has been here the last several weeks or months. So I think from a supply perspective, looking back at the last hogs and pigs report, looking back at the cattle on feed reports, it gets pretty easy to talk about tight supply. You still have to have somebody willing to buy it higher. And that's the same thing we talked about in corn. You can have this bullish setup, but at some point the bullish market just doesn't pan out because you have to have people buy it. And it gets to a point where the speculator says, well, if the consumer isn't going to buy, I'm not going to take the risk. And the consumer says, well, it's high on the speculator, so I'm not going to buy in the store, and you get this sort of market like we have right now in cattle where, gosh, it looks like it could be a real special market, but it's just to put things in perspective, December cattle are trading at the same price they are today as they were in January. What is that, 9 months ago? Mm-hmm. I think that's a good summary. Same price.
Well, and one has to wonder to that point with cattle. I mean, maybe, we keep thinking it's going to be a special market, but one has to wonder, is this a top that nobody wants to, necessarily acknowledge here maybe, or maybe there's just so much optimism in cattle that we think it's going to go higher, but maybe is this the plateau and we just can't break through it right now, Bryan?
That's an excellent point. I had discussion with cattle producers today. And we really talked about, look, that the handwriting could be in the wall, that it just can't get through this. And we're all optimistic, and then it just dumps over. Worries about recession, worries about this, worries about that. And the next thing you know, that gut-wrenching feeling like we saw in early June where the entire commodity complex tipped over. And in particular, the December contract went from the contract. So my encouragement has been for producers to start really thinking strategically fourth quarter, buy some puts as safety valves. If you're willing to take the risk, try and finance them, or you might finance them, sell the calls above the market, and be willing to defend these prices. Don't get caught. We've all been there. You got a fundamental picture that's bullish. It's been trending higher or sideways, or cattle holding up well. And then all of a sudden, in a very short period of time, it just ends and crashes. And you look back with nothing but regret. Let's not have that regret.
Bryan, how about that dairy market? Catch us up on what you're seeing there here in the last week or so.
We got record high butter prices, but you don't have record high cheese prices, and the cheese is the drag. Some of the producers are losing their premiums. The dairy market might be akin to watching paint dry the last couple of months, higher or lower, but not really going anywhere fast. Got the big spill with the rest of the commodity complex in the late June, July period. Recession concerns, dollar concerns, China concerns, just all wet rigs, over the top of this cattle complex, the dairy market right now. Oceanic prices did show some improvement this week, and the board has too. It's rallied up $1, a little bit more than $1 in some of the contracts, but it can't get the traction to get above this. So we're going to start getting a little bit more, let's call it progressive in talking to producers about defending this again. Markets that hold up and hold up and hold up, that's great. Hopefully they can get a springboard, pop it to where we think they can. But if they tip over the other way, it gets pretty ugly pretty fast. And that's what we want to be careful of now. Cattle, hogs, dairy, particularly cattle and dairy, just, we don't need a 3-week window where things get ugly. And then you look back and it's like, well, why didn't I? And why should I? And all of that. Really kind of take some time, talk to your advisor now and make sure that you're kind of strategizing this out, making sure that if you're going to buy puts and things, you're spending good money for the right purpose.
Well, Bryan, fantastic stuff as always. Floor is yours for the final question. Anything else you want to mention today or reiterate for us?
Well, it's September 8th. USDA report is out Monday the 12th. So who knows? One of our colleagues said today, worked with them about 30 years, and he said, I always say they ask us for a surprise in USDA. I told him, you never said that before. But anyway, but he has a point. Be prepared was his point. You never know what might come out of a report. Data in is only as good as the data in, if that makes sense. So we'll go with that. Remember, we're pretty high priced for this time of year. So if you're behind or things are a little bit leery on, whether you want to forward sell or you don't like basis, figure out a good strategy. Make sure you're balanced. It is really, really easy, Jesse, to have a bullish mindset. The Northern Hemisphere just didn't live up to crop expectations this year. So that means a lot of pointing toward the Southern Hemisphere to come through. Sure, Brazil looks like they're going to up their ante, but it also looks like this week there was talk of the La Nina pattern sticking around another month instead of dying down in December now into January. So you strap on your seatbelt, get ready.
Very true. Well, Bryan, if folks need some advice, I know they can reach out to you and the folks there at Total Farm Marketing very easily. How can they do that?
Just give us a call, 800-334-9779. That's going to be your best bet to connect with us and go that route. If you want, shoot me an email. I'm a Bryan with a Y, so BRYAN at totalfarmmarketing.com.
Well, fantastic. Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Always a pleasure, sir. Have a great rest of your week and weekend.
All right, Jesse, thank you. Same to you. Appreciate it.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.